Good morning, folks, and what a beautiful day it is to be an investor in the crypto markets. Bitcoin currently trading at a price of $115,000. That means that our long position that we got into when the markets were crashing during that massive, hellish $19 billion liquidation event, sparked by Trump's tariff threats on China and fueled by over-leveraged positions in the market, fueled by long liquidations in the market. We were buying into that, and we are now up. We're sitting about $1,000 up in that trade. We have broken the highs at 114K. That means that we have confirmed a technical uptrend from the lows that we put in after that massive, massive sell-off. And here we are, sitting in profit. And this is playing out almost exactly as we saw it happening. If you caught last night's video, we spoke about the fact that we were getting to the point where we were going to start liquidating some of the short leverage in the market, because on net right now there is much more short interest in the market put in over the last 30 days. Loads of people jumped in short when they saw that sell-off, and some of those positions have started to become liquidated. So that is worth about $200 million worth of short liquidations over the last 4 to 6 hours. And as we know, when a short position is liquidated, they are forced. The exchange is literally buying Bitcoin on the market to cover those short positions and get those traders out of the margin trades. That means forced buying onto the market, increased supply, and when supply increases like that, particularly when it increases suddenly like that on forced buying, that is forced closure of those short positions, prices go up very rapidly. So the next point of interest to the upside is going to be the 116K mark. Those were the highs that we put in after the initial bounce, after that big down move. And from there, I think it's very likely we see a continued run on those short positions. Now, one thing to be aware of is, once again, the lemmings, the retail traders who are behind the curve, see these green candles and they jump in on long leverage. And we do see right now on the daily time frame an imbalance of long leverage in the market. So there is, of course, as ever, a risk that if prices cool off a little bit, we get into some of those long liquidations and we could see some volatility to the downside as well. But I'm not too afraid of that right now, and that is partly because I know that there is a lot of liquidity sitting down all the way to about 108K, and we can see that if we look at the volume profile, the point of control of that fixed range volume profile put in from the lows of this move to where we are right now, coming in right about that 108K level. So to me, that is looking like a bid if we slip off from here. And don't be surprised, don't be shocked if we do see a sell-off from here, because there is a lot of long leverage in the market still. But nonetheless, we are ripping to the upside right now, and that is fueled by these short liquidations. All of the lemmings, all of the retail traders who are a step behind the curve got in shorts, and we know that there's up to $5 billion worth of shorts to liquidate all the way up to the former all-time highs. So very happy in this position right now. Don't be surprised if we do see some downside action. There will be volatility in both directions, no doubt. But we were ahead of the curve on this one, okay? We saw it coming. We were one step ahead, and we treated that massive $19 billion sell-off as a buying opportunity. It pays in this market to be greedy when others are fearful. Buy these dips, buy into fear. It doesn't feel good at the time, but it feels good at moments like this when you start to see fruition on that. As always though, just my opinion, just what I'm looking at. Nothing I say should be considered financial advice. Thank you so much for watching. Plenty more to come. Catch you in the next one.